All right, everybody, this is Civ. So I'm creating this other part of me. This is still under the umbrella of Hunter and Chavy. That's my company name. I, if you guys follow me on my other YouTube channel, I have the anesthesia101online.com YouTube channel. But I'm starting this other channel. This is going to be Hunter and Chavy Investments. I mean, nobody really talks about investments growing up where I came from. So this will be a first episode of many to follow as far as my journey through financial freedom. As you know, I talked about some of my podcasts and my other YouTube channel that I'm looking to do real estate wholesaling. So at that point, I'm looking at that. I'm also trying to look at, being financially free, looking to other things as far as looking at my finances, my mortgages, my real estate investments, things of that nature, and also student loans. So maybe that'll be another episode we could talk about student loans. I have a master's degree in nursing anesthesia. Along with that comes with student loans. So unfortunately for us, student loans don't get forgiven. I've filed for Chapter 7 and Chapter 11 bankruptcy in the past. I had poor credit history. And unfortunately, those student loans don't go away. And because of nursing, there's certain criteria you got to meet to get your loans forgiven, and I didn't meet any of those. So I'm moving forward. So this will be Hunter and Chavy Investments. This will be my second YouTube channel. I'll put all the description and links in the below, and you can follow me on there. But this is my first of many episodes. We're going to just talk about Helocs. Actually, with the coaching program, with a couple of coaching programs as far as real estate investments. And this piqued my interest with the Heloc. So Heloc is home equity line of credit. If you guys want to check out other, namely videos, as the Quack Brothers is pretty good, KWAK. I went through it. I looked at their stuff, and they can delve more deeper because they're more into finance. I'm in healthcare, so this is a documentation of what I'm going to be doing as far as the Heloc. So today is going to be the first episode of many, like I said. So today I'm going to share my screen here. Let me see if I can share my screen 1 second. All right, share screen, share. All right, this is the email that let me minimize this. This is the email I got today. I inquired about getting a home equity line credit. So we'll go through this together. So basically what a home equity line of credit, if you guys don't know, you're borrowing against the asset, which is your house. So if you have let's say you paid for a house for $200,000 and you paid, I don't know, 180, it still remains in the balance. You paid 20,000 already. So you have 20% equity in the house. So you borrow against that equity where you could get a home equity line of credit. They use the equity you have in that property to give you money. So if you don't pay them back, obviously they take over your house. So it's a little tricky here. That's why I'm going to walk this path. It's going to be narrow. It's going to be my journey. We'll hopefully expose some of you guys to this stuff. But what I inquired about the home equity, there's a couple of packages out there. You can either look at different credit unions, you can look at local banks, national banks, and they have different varieties, different flavors of Helocs. But this is the one I got. This is from a lender I have for my solar panels. So anybody looking to do solar panels, get them now, because as things change, the environmental restrictions change, everybody's going to have to get solar panels. I love my solar panels. So that's a little plug for that. And I got mine at Revolut Sun from Burlington, Massachusetts. They're good people. Ask for Rich. He's a super nice guy. But Coastal Heritage is where I got the solar panel loan from. And then I also have a personal loan, vehicle loan from Connexus Credit Union based out in Wisconsin. So the one from Coastal Heritage, based in Massachusetts, they have this is called Coastal Plus Home Equity. So the two flavors, like I said, we talked about. There's going to be initial draw. So basically, with home line credit, it's a revolving credit. So just like your credit card, you borrow it, you pay it. When you pay it, you replenish that. So let's say your credit limit is $1,000. You purchase something for $500. when you pay off that 500, that 500 comes back to $1,000. So you keep paying it, doing over. It's almost a revolving credit, but it's secured by your home. That's the only downfall with that. So the different flavors they're offered here, I'm just reading off my sheet: a 5-year, 10-year, 15-year, and 20-year program, and each one's either fixed or APR. So based on the averages of interest during the day, that would determine how much you pay. So they only have one flavor of that for Coastal Heritage, and then the other one I had a loan with my truck was Connexus Credit Union, and they have a home equity loan and Heloc, and interest only Heloc, and then a 5/1 arm. Not too familiar with 5/1 arms. I'm not a finance guy, but I honed in on the Heloc, the home equity line of credit. And so going back and forth, these two, the first would be Connexus. You have a 15-year draw. So you have to 15 years to draw from that account that they gave you. So let's say you applied for the HELOC and they give you a loan of $10,000. You have 10 years, according to Connexus, you have 15 years to draw out from that account. And then you have 15 years to repay back whatever you owe on the balance. So 15-year draw, 15-year repayment. And of course, everything's based on interest rate. So some will offer introductory interest rate, like this one will offer the 1.5% the first year. And then thereafter, of course, it fluctuates anywhere from 4 to 5%. It might be a little higher from your interest rate you're paying on your mortgage. So that's the chance you take. You take the HELOC, you pay off your mortgage, because I'm using it to pay off my mortgage. I'm not using it to renovate my house. People will use it for that, but for my intensive purpose for this video, I'm using it to pay off my mortgage, so I can pay off my mortgage. And I don't think I stated from the beginning. I'm using the HELOC to pay off my mortgage from anywhere to 5 to 7 years. That's the reason I'm going for that. I'm not doing the 30-year. I'm not doing the 15-year. By doing this route, that's how I'm trying to achieve paying off my mortgage faster. And then the second part is the Coastal Heritage, and they offered an introductory 2.99 for first 12 months billing cycle, and thereafter is anywhere from 5 to 5.25. So based on, this is the only two I'm looking at right now, but I'm pretty sure you can find it anywhere from national banks, Bank of America, Wells Fargo, whoever you bank with. So there's differences. So here it is. So here's the question I shot out an email today, as you can see. So good morning. I asked, do you need a credit check for this? Because like I told you in the beginning, I had a bankruptcy. I filed for bankruptcy before, so they do credit checks. And then and I asked the second question is, do I need appraisal on the house? Because I remember when I purchased the house, we had paid the appraisal, and it can average. When he said average here, this is kind of low balling it. 450 is the lower number. I've seen higher than this, so anywhere from 450 to 600. So it's to get an appraisal. But according to him, he looks like he's he also has MLS with a national multi-listing service. So basically what it is, he's a real estate agent. He can actually look up these numbers and figure out how much your house could be appraised for based on, because he has those access numbers as a realtor. So he's saying appraisal 450, but he said 5% of the time they don't need it. It's about 5%, so they don't really need, because he can actually look this stuff up, And then this is just little stuff, side stuff. You combine loan amount, first mortgage. If I don't have a first mortgage, I don't have an equity line. So he's basically saying your first mortgage plus your home equity line that you're taking out is going to exceed $500,000. You're gonna have to apply for excess of $250 more. And because they want your business, they're going to pay for all closing costs. As mentioned, I don't know about Connexus. We'll figure that out when we get down that road. Closing costs are usually paid by us, but appraisal is needed. The cost on the borrower or your home is in the trust. So my house is not in a trust, so that kind of forgoes that, because if that's the case, they need a trustee certificate and recording fee. It's approximately $226, but most of the cost is taken up by the bank. So they will actually, the Coastal Heritage Bank will actually pay for that. So that's it. This is a little introduction to what I'm going to do. We'll walk this journey. If you guys want to follow me, we'll keep posting on this YouTube site. Like I said, this site being Hunter and Chavy Investments. So reiterate again, it's going to be all about finances, real estate, student loans, things of that matter. This is different from my other YouTube channel. That's where I kind of teach on the nurse anesthesia aspect of that. Okay, I hope you guys follow me and like my page and share this with somebody, and I'll continue to share and my journey with this Heloc part, and we'll continue to bring more subjects, things that that piques people's interest. Like I said, maybe we'll look at more student loans. We'll look at other things like solar panels, and I'll go over that, what I did with the solar panels. I'll show you inside scoop with the solar panels on that. More things to come. All right, I'll see you next time.